Now, the Fed is in the midst of a balancing act. It is trying to stoke an economic recovery while also restoring the banking system back to health. So what's on the table for the Fed in this two-day meeting? Let's bring in Bloomberg's Scott Landman. Scott, always great to see you. So what should we expect to hear tomorrow from the Fed?
Well, the thing with tight credit is that banks just have, they just have to be really, really certain that people are going to be able to pay them back on their loans. And you still have unemployment rising. You have commercial real estate values falling. And all that just contributes to an environment where even though the Fed might say that we're starting to emerge from recession, banks aren't about to open up the floodgates yet. And that's a reason why people say they're probably going to repeat in their statement that credit's still tight in the economy, and that's going to restrain things in the next few months or so.
What more can the Fed do? Of course, we've been reporting for months and months about its quantitative easing efforts, but what can it do to further untighten, loosen credit, and juice the economy?
Well, it would be a real shocker if they just came out and said, why don't you go make all those subprime loans again? They're really not going to do that. The only thing they can do, or one of the only things they can do, is just keep their interest rates at zero for a longer period of time. They can potentially buy more housing debt. They can potentially reiterate their statements that banks should be making loans to credit-worthy borrowers, but they still want banks to be able to be healthy and raise capital so we don't have the effects of another financial crisis.
There's been criticism, talk that a lot of banks are hoarding cash here. So how much more capital do these banks need before they can lend more freely?
That's a good question. It's something that might still be fluid. Fed, of course, had their stress tests a few months ago, and they said that there was a $75 billion capital hole, and the 10 banks that were highlighted raised a good deal of that capital, or said they would raise more. We still have a couple months to see the results of that, but we just had a major banking analyst, Mike Mayo, today saying that the commercial real estate loans on a lot of bank books are likely to go sour, and that's going to cause more losses, and banks are going to have to raise a lot more capital for that.
Scott Landman reporting in D.C. today. Thanks so much.
Thank you.